Trading. We're back in the market. Today we're going to talk about the three major, maybe most persistent rules that traders have to stick and live by. How to trade correctly, how to use it while trading, what to do, what not to do, and we're going to use again the Nasdaq contract as we was covering the last month or so. Why is that? Because we want to see basically the results reflect in our prediction. I wouldn't say prophecies, but as part of understanding the story correct and the right way, we can see actually how the cover that we did for the last couple of weeks was proving themselves as a right strategy and the way to read the map correctly, read the price correctly, understand where the price is going and heading to, why is it doing it, and also based on basic knowledge and rules that every trader have to stick by in order to live by when trade. So as usual, I want to show you before we begin the weekly interval so we can understand the trend a bit better. And we dived in. I want to say good morning to my Discord community. I hope you had a successful week. Those who traded with us, as I said before, if you are traded the actual Nasdaq contract, the mini one, not the micro one, you already, if you swing traded it from this position right here, from here all the way to the position that the price is heading now is actually now you stacked up more than 100k, and I know it was not an easy position to hold, but if you understand it correctly and you did it right, so congratulations to you. I'm very, very proud of you. My traders in my community, of course, had the chance to see this thing happening live while we was trading. Some of you guys that hold the position, it was remarkable to see. It was not taken lightly, and it's really truly art to maximize your position, to hold your position, especially when you see all the ups and downs, how the price keep on reversing, and you're holding already you stocked up a lot of dollars in the account, and even so continue to and under understanding that the price definitely can flip and reverse at any time. So congratulations to you. I'm happy for you. Let's dive into our subject of the day, the three major rules of every trader have to live by. Let's dive in. So obviously in the week trend, we see we're still on an uptrend. We see how the price still go up towards the major supply. As we said the last couple of weeks, the price over here met the supply area. This was the tariff speech right here, and of course landed on the major demand. As we said, when the price reaches from a major demand, major to a major area, is going to try to complete the full move. And as we see the price actually doing this as we speak, and the last couple of weeks, ever since it lands on the demand pool, we see the first check, second time check, and then go up and up again, trying to complete the full move and maybe even breach this supply and go up again. We yet to see and we yet to discover, of course, with the upcoming weeks, and we know where the price heading, if it's going to flip and reverse in this area or not, it's going to break it. We're about to find out. Now we have the chance within the day. Those of you who do not swing trade, we have the chance to have a couple position within the day. Let's talk about the position and the rules that you have to live by as a trader. So we see how the price behave. We see all those flip of hands over here. We see how the price, we're looking now in the day interval, of course. We see how the price behave. I'm gonna dive down a bit more to the 4 hours interval to understand how difficult was it to hold a position. And those of you who did it, we see that how the price basically every time fluctuates over here, flipping hands all the time, breaching all the minor supplies on the go, and reaches, or basically almost even reaches the supply area over here. We aim to get it at least until the red line that we marked over here, but basically is the beginning of the major supply pool, to have a test and to see how the price behave when it reaches those areas. So with all that being said, we trading in our community, we mentioned it a couple of times that basically there's a couple of rules that you want to stick and live by. And the first one will be to have a devised plan. Basically, every good trader, every successful trader, I don't want to say good trader, what's a good trader or not, but a successful trader will always have a trading plan. That's the first rule. The second rule, which is most important, is never ever deviate the plan. If you have a plan, stick to it, do not change it. And by any other means, if you had set up the plan, do not deviate from the plan, and it proven itself again and again and again. And we can see it very loud and very clear. We see it on the price and we see it on the graphs. And those of you that actually stick to the plan, never deviated from it, saw the success within the thousands of dollars. Those of you who took a lighter risk on a micro contract also saw thousands of dollars. If you swing traded this on the hundreds during the day. So it's super important to have the plan and not deviate the plan. And the third most important rule is risk management. How do you basically during the day, or if you swing trade, how do you evaluate your risk? If you are dealing with your own money, or are you using a prop firms, those of you using prop firms, of course, to leverage themselves. Of course, a lot of us know that the prop firms give you a high leverage, give you a stack of money to trade, and majority of us blowing the accounts because they over leverage. They did not deal with this kind of money, and they think that the leverage is working for their benefit. And honestly, it doesn't unless you know how to trade and to evaluate the risk correctly. So when I said a couple times before that the job of a trader is not actually to trade. As less as you trade is healthier for you. It's basically to evaluate the risks properly. And what's the values properly? Not basically risking more than 2% at max of your call it bag or your file of money that you received either by a prop firm or your own capital. And that will be the right way to continue and move with the market. Yes, there is successful days. Yes, there you can hit the market a couple of times, and as I said it a couple of times in the psychology of trading with our community, something happened to your brain when you are winning consistently. You think you're invincible, and you're doing five successful trades, and then suddenly on the sixth one, you completely evaporate all your funds, God forbid, or the prop from funds, and then you have to reinvest yourself again and again, let alone the disappointment. So the conclusion from this is basically we did not evaluate the risk correctly. And if we evaluate the risk correctly, yes, we need to take under consideration that, of course, there is a stop loss, and that basically the price can hit the stop loss. But when you hit the stop loss, does it hurt you enough to actually not trade anymore? Was a calculated risk that you was willing to take? I don't want to call it a hit, but if you evaluate your risk, are you ready to jump back into the market? Are you ready to do it again, even in the same day? Take a little bit break. What do you do when you hit the stop loss? Does it affect you completely into the point that you lost, God forbid, all your money, or evaporates your file from the prop firm and decided it's not for you? How do you do and what do you do? So as I said, the right formula is to have a plan. The second thing is to not deviate from the plan. And third, evaluate the risk properly by not risking more than 2% at max of your capital or the proper capital in order for you to continue even within the day or different days to continue to trade and to get the success rate that you achieve. Again, we aiming to 80% hits on every trade that we do. Basically, we call it the statistic we'll say for every 5 trades, 4 of them should be successful, 1 of them can fail. Basically, it's 8 out of 10, which is 80%, which is amazing results. So you can keep on see how you continue and progress in the market. Let us see today how the market behave. We already, as I said before, we know it's an uptrend, and we see how the price already within. We're looking right now on the 15 minutes interval. I want to show you basically the night profile right now. We see basically how the price behave within the night profile. Obviously, yesterday we saw this huge pick going up and then dropping down, and then within the night the price slowly can continue going up. As I said, we're still in the uptrend towards the major supply. We can see how the price already started to breach up within the day profile. I'm going to open now the day profile and you see what's happening over here. why we aim this position over here, and let us see it right now. So we see right now the day profile is started to build up. How does it build up? It basically open up right here. Basically, we see how the price, a huge institutional buyer rush, basically rising the price up outside of the high value area of the previous night. It's already reaching over here the high value of the previous day, going out to the 15 minutes interval pool. And what we want to see over here, when we basically reach over here, we want to see it flip and reverse, and then going up, raising again. So this was a limit position that we stationed before the market was open. We already see that it's very much wise to do so. Why is that? Because we evaluate how the price looks like, where is it gonna go, and what's the risk taken. Of course, if you can see over here, we're only risking $154 and potentially gain 608. And I want to show you in a quick move what's the ratio. Let us see the ratio in a sec. So we take a long position, and we see basically that the ratio risk management will be basically 3.32, which is amazing risk reward ratio, which is basically within the day we striving to do at least at minimum 1 to 2. Over here is 1 to 3.3, which is amazing. For every dollar that you risk, you're gaining a $3.3, which is very, very healthy and very good. What happened if the price did not exceed our expectation and run us over? Well, it's all depends on, again, your risk management, how much you risk from your own capital or for the prop from capital, and what's going to happen if it runs it. So personally, I can see this thing that as a very successful trade position. Why is that? Even if it hits the 154 towards down, I know that the price right now trying to achieve to get to this 15 minutes demand pull, flip and reverse. Where is going to go reverse to? Either to pick up those commands over here where we station at this candle, which is also parallel to the low value area, or potentially going down to the high value area, or going down to high value area of the previous night, or the low value area of the previous day, which you see right here represented over here, and then flip and reverse. And what's going to happen? Let's assume the price actually does this move, and I'm waiting for the price over here, and I want to trade for contract, and knowing that I already lost $154. I'm gonna risk over here $122, and I know it's an uptrend, and I'm gonna take it all the way over here to the 15 minutes interval. Those 154 that I lost are already been covered in the 2,340 that I stationed over here. Means that in both position I already kind of risking 270, but the potential gain over here is incredibly insane. I mean, I can still, or you can still take those hits, knowing that within the day you still have that chance not only to recover, but actually to make even a higher income from it. If we take this long position and we take it all the way up to here to at least the 15 minutes ratio, and the risk reward ratio will be over here 1 to 12, which is basically almost 1 to 12 and a half. For every dollar you risk, you're getting almost $12.50, which is incredibly insane. You can deduct 154, and there you go. You get you take this amount 2,340. You will reduce 154. You will get 2,200 or maybe 2,190 and change, which is incredibly insane. It means that if you are understand the market correct, if you understand where the price go, you would not be scared to take those positions. Of course, a healthy position, at least at minimum, will be 1 to 2, and of course, a position that you can feel comfortable to take. And continue with your day. You don't have to be glued to the screen. Means that you can continue with your day, whatever you are occupied with. If you have kids, if you have work, you station those positions within before the market. You see, you analyze the price, you see the graphs, and you understand where does it head to. You would not be afraid to take those positions. I mean, this is a very healthy risk reward ratio within the day. So of course, If we go into the the mini contract, with the amount will be higher, the gain will be higher. Of course, the stop loss will be higher, but of course it's all equivalent to the contract that you are dealing with, and the amount of money that you're willing to risk and how you're risking it. So if you take those hits and you can continue to basically trade the markets under the understanding that yes, it can hit the stop loss. If I read it correctly, yes, of course the price would always take its last word, the market would always detect the last word, but we as a traders are risk managers. So if you evaluate your risk correctly, if you have you have a plan and you stick to it, you will be very successful trading. Do not deviate from the plan. And this is very, 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 very important note that I want to leave for my community and for those of you watching. This is how you have the stamina and to continue with the market and continue to trade it. As I said many times before, you have to look at trading as at your own business. In every business, there's a chance that you're gonna lose some money. Not every time you have clientele, not all the time. Whatever you're selling is gonna be sold. There's a depreciation. You have products you invested. You have time you invested. All of those are implemented in a way, shape, or form of money. If it doesn't come out to the expectation that you wanted as a business owner, there is a chance you're gonna lose money. Same goes as trading. You have to risk the amount you're willing to take in order for you to keep on push your business. And if this is your business, you can of course make it a tool for you for financial freedom. As those of you who are joining our Discord community knows, and I'm not taking this concept of this sentence financial freedom too lightly, but if that's a tool that can get you out of the rat race, of course it can take you for 9 to 5 jobs, of course, but you have to trade the market long enough to understand how it works and how you can continue to trade it as a business owner. So that was the subject of today. Well, of course, we already stashed a couple of positions within the day. I want to wish you successful trading. Enjoy the weekend. Of course, there's more life than trade. You don't have to be glued to the screen. Those of you, as I said before in the beginning of the video, that was swing traded with us, already stuck up 100K plus. Again, congratulations. Leave the screen. Go enjoy the fruits of your labor. Go enjoy the world. There's more into it than trading. This is super important to always recharge your battery, get to the market fresh, and continue your journey. I want to wish you very successful trading. As always, I'm going to see you in the next market view. Enjoy the weekend.